So the normal definition for inflation is simply things are getting more expensive, or you can just say that your currency is becoming less valuable. That's a more valuable, as far as I'm concerned, the definition for inflation.
What will be in the Reserve Bank's new announcement coming up this week? What are the implications for high inflation for South African businesses and consumers? Here to help me unpack this issue is Economist Dawie Roodt from the Efficient Group. Dawie, thanks very much for being with us here at the CRA. What do you think will happen this week from the Reserve Bank? The latest announcement before this was a 50 basis point hike. What do you foresee this week?
I think most economists expect the Reserve Bank to continue with this cycle of tightening monetary policy. So I expect them to increase interest rates again. I think that is pretty much the expectation of most economists. The question is by how much. Now, they've said that the previous one was an increase of 50 bips. So I think they're going to go for another 50 bips increase. There certainly is a possibility of a 75 bips increase, but I think a 50 bips will be sufficient. There are a number of reasons why I say so, but I think they're going to go for a 50 basis points increase. More importantly, however, it's not necessarily the margin of increase. Of course, that is important as well. But more importantly, I would say, is the Reserve Bank's expectations regarding future inflation. And there, I think the Reserve Bank will tell us what they think, the market thinks, is going to happen to future inflation, because that is what the Reserve Bank's job is. It's not to do anything about current inflation. That is water under a bridge. There's nothing you can do about that. But it's certainly the job of the Reserve Bank is to manage future inflation expectations. And if inflation expectations becomes too high, then of course monetary policy needs to be tightened even further. So that's the more important one. But my money certainly is a 50 basis points increase now.
Just a bit of international context. The latest numbers from the US, for example, indicated CPI at 9.1%. That was up from 8.6% in previous months. So likely that we're going to see possibly another 75 basis point hike from the Fed like we did previously. That was the highest. Inflation is now at the highest point in 4 decades. So do you foresee the global trend also continuing of central banks just tightening and South Africa following that trend?
By the way, part of the reason why I think the South African Central Bank is going to increase by 50 bips only and not by 75 bips like what we expect the Fed is going to do is because they started earlier in the cycle. And that is part of the art of central banking, is to start as early as possible, because the earlier you start in a cycle, the less you have to do in terms of interest rate increases. Now, currently inflation in South Africa, we're waiting for the most recent numbers now. It's probably going to be released this week. But we do see inflation above 6% in South Africa. But it's very unlikely for South Africa to be in a position where inflation in South Africa is actually approximately 3 percentage points lower than what they have in the United States. And that is the reason why the Americans need to increase interest rates by a much larger margin. They've waited too long, I believe, to start tightening monetary policy. And now that you've waited too long, you have to take bigger steps in making sure that in future inflation will be curtailed. And that requires an increase of about 75 basis points in the case of the US. There are some analysts suggesting a 100 bips increase is possible. In fact, the market is currently trading for a 40% possibility of 100 bips increase in the US, but my view is that they're going to go for a 75 bips. I also believe that inflation globally and also in South Africa, we're gradually reaching the point where we will getting closer to the top turning point in inflation. Inflation is likely to start coming down a little bit within the next couple of months or so. But still, it is important for central banks to make sure that inflation expectations is properly managed. And for that, I think that the Fed is going to increase interest rates by 75 basis points. Also keep in mind is that we have seen a significant appreciation in the exchange rate of the dollar recently. And that has to do with the Americans taking quite big steps. I mean, the previous 75 bips increase and the expectations for another 75, maybe 100 bips increase now. All those things are supporting the exchange rate of the dollar itself. And in the process, smaller currencies like the rand, for example, is coming under pressure, which will add to the inflationary pressures in South Africa. I'm not too concerned about that. I think the rand took a bit of a knock, but it's gradually probably going to come back a little bit. And at the moment, the exchange rate of the rand is more a factor of international commodity prices but also it certainly is being affected by what the Americans decide in terms of monetary policy. But for the Americans, I expect another 75 bips, and I also believe that the ECB will continue with their tightening cycle, although the steps that they're going to take will probably be smaller. So I expect the ECB to increase by 25 bips only.
We certainly hope you're correct about inflation maybe turning at this point. I'm sure South Africans across the board are feeling those effects. I just want to ask you, Dawie, in terms of the driving factors of inflation, what are the biggest causes of inflation pressures in South Africa? Specifically, you could maybe touch on sub-Saharan Africa, but just for the South African consumer, what lies behind that?
Yeah, well, I think it's a little bit artificial to say this or that is the reason why inflation is going up. Well, analysts will tell you, or economists will tell you, that at the moment the driving forces behind inflation in South Africa has to do with things like energy prices, especially petrol prices, going up quite a lot, diesel prices and so on. Some other prices, food prices also going up quite sharply. But, it doesn't really matter. It doesn't matter purely from a macro or a monetary policy point of view. Where inflation comes from is totally irrelevant, because you can just as well argue it's not the petrol price going up that is causing inflation. It's the beer price not going down. That is what's causing the inflation rate. So it really doesn't matter. And in fact, there's another definition for inflation, which I prefer, and that's a continuous fall in the value of your currency. So the normal definition for inflation is simply things are getting more expensive, or you can just say that your currency is becoming less valuable. That's a more valuable, as far as I'm concerned, the definition for inflation. But yes, so technically at the moment, the driving forces behind inflation has to do with food prices, energy prices, and some additional factors like, for example, certain input costs, like, for example, fertilizer prices going up and so on. So those are the factors at the moment contributing to the higher inflation rate in South Africa. A bit of good news, the most recent data suggests that we could see a bit of a fall in the price of petrol at the next announcement. But of course, it's early days still. And also keep in mind that another 75 cents of the fuel levy will be reinstated at the next petrol price announcement. But despite that, a few cents lower can be expected as far as the petrol price and the diesel price is concerned.
Dawie, in terms of policy, and I mean, we've spent a lot of time talking about monetary policy, but does government have other tools in its sort of arsenal, as it were, in terms of policy reform? That's obviously spoken about a lot in the South African context, but what do you see maybe as the low-hanging fruit reforms that would fix, or not fix, but alleviate some of the other pressures of the whole, inflation context on South African consumers? What do you think in that regard?
Yeah, the public quite often ask me this question and say, listen, the Reserve Bank is increasing interest rates because of inflation, and we have inflation because of the petrol price going up, and that is because the oil price is going up, and increasing interest rates is not going to push down the international oil price. So why do we do that? Now, I try to answer that by saying you have to look at it differently. It's not prices going up. It's the fact that the rand is losing value. That's the reason why we're increasing interest rates. But you're absolutely correct. The Reserve Bank, of course, is responsible for making sure that inflation remains between 3 and 6%. It is above that at the moment, by the way. But there are many other things that we can do. The Reserve Bank, since they are responsible, is they only have one real effective instrument in fighting inflation, and that is, in fact, the interest rates. But there's much more that we can do to get inflation lower. But that requires some political conviction, and we simply don't have the politicians that are prepared to take the necessary steps. But the things that we can do, get proper competition in the electricity market, for example. Eskom is protected. They get these huge increases in prices, and they do not have to compete. But the rest of us, we need to compete. Minimum wages, that's another example how you actually keep people out of jobs. So that's another example. Another example is the civil servants that are hugely, as a rule, not all of them, overpaid and underworked. The other state-owned enterprises are a disaster. The local authorities are a complete, total mess. So those are the things that we can and should fix. And if we can fix those sort of things, inflation will be lower in any event. But since we don't have the political will to fix those sort of things, the only alternative that we have that remains is for the Reserve Bank to increase interest rates and trying to force inflation lower. But that is a very painful process. And you and I, we are forced to take that pain, while other institutions like Eskom or the civil servants or the local authorities, they are not forced to take that pain because they are basically protected from a political point of view. But you're absolutely right, and perhaps it's high time that we start talking about these sort of things, these other things that can be done to get inflation lower, and not only monetary policy. I think we expect far too much from the South African Central Bank.
Thank you very much for watching. Now we turn the video over to you. Let us know in the comments below how rising inflation is affecting you, how you're trying to cope with it, how it might be affecting people in business who you're in contact with. Also, remember, before you leave, to please like the video and subscribe to our YouTube channel if you have not yet done so, and tell your friends and family about our analysis at the Center for Risk Analysis. Until tomorrow, I'm Chris Hattingh for the CRA. Take care.